AI is changing everything, right? Absolutely everything. And there are two ways to play it. You can either try and pick the companies that are going to win big with AI, whether that's the chip manufacturers, the software developers, or the companies that can implement it internally and cut their staff by 50%. Or you can choose to play in the businesses that can't really be disrupted by AI. A plumbing business, a roofing business. AI is not going to change that.
Our guest today is an entrepreneurial investor who's passionate about helping others build wealth through smart, practical strategies. With experience founding over a dozen companies and investing in private markets, he now focuses on small business acquisitions, boring businesses with real profits. Through CapitalPad, he connects investors to opportunities in industries like HVAC and machining, sharing his no-nonsense approach to wealth building and financial independence with audiences everywhere. Welcome to the show, the founder of CapitalPad, Travis Jamison.
Pleasure to be here. It really is quite an honor to be joining you here. So thanks so much.
You bet. Travis, share what inspired you to become an entrepreneur and launch multiple companies.
I think Charlie Munger said it best. Like he wasn't after to get rich. He was after independence. And that was definitely the path I was on as well. Independence. Never really had the goal of getting rich, probably because I never thought it was like attainable in like the least amount. It was just, I want to be able to do what I want to do with my own time. I'm not really cut out for the corporate world. Never really had a real job, I would say, put in quotes, real. And so this was the only path for me, really. But it was after the independence.
Nice. You know, that freedom and autonomy of one's time is really becoming more and more relevant in society today. So let me ask you this. What's your investment philosophy, particularly for those boring businesses that are highly profitable?
To be clear, it's changed a lot over the years. It's ebbed and flowed. I mean, I was in the venture capital space for a while. I was trying to personally acquire a holdco of all kinds of different wholly owned businesses and whatnot. But my philosophy kind of ended up shrinking down to something that's much more coherent and like follows my personal values, which is that small businesses have like the best returns out of any asset class out there. I think most people, if you go to like your local country club, ask around what everybody does, most of them started some like small, boring business of some sort. Like they own like a dumpster company or something of the sorts, right? And so I think those are the best businesses to own to build wealth. The problem is always been, one, you got to operate them. That's pretty difficult. You can't scale multiple companies at the same time, or if you can, it's very, very difficult. Like the holdco model is not easy. And like a single business is kind of risky, right? A lot of them fail. But if you were able to build like a diversified portfolio, let's say like own 20 or 30 of these small businesses, what would that look like? And I think that is the most beautiful portfolio known to man, because these things, if you look like the public markets, you know, S&P 500, it trades at what, roughly like 30 times price to earnings multiple right now. You look at these small businesses, they trade at like 3 to 4. And there's trade-offs with that. There's a reason they charge a plate or trade at a 3 to 4x multiple. But if you can passively own them and diversify into a bunch of them, it becomes the greatest asset class.
Especially if you can begin aggregating them so you can scale up that revenue to hit those higher numbers. That
Yeah.
makes sense.
Well, so if you're combining them all, but so from my perspective, like I'm taking a passive minority stake in 30 of these, completely different industries, different everything. So I think if somebody's doing like a roll up or a holdco of some, then you start getting these benefits of scale, and that really kicks in. But I'm really just looking for a bulletproof, diversified portfolio of these small businesses that, like, you know, kick off 20% cash a year plus increase in equity value, hopefully. But even if they don't grow, it still is a great deal. Like that's kind of what I'm interested in.
Gotcha. What are some of the key factors you're looking for then when you're evaluating a small business for acquisition?
So the way it works for me is the deal sponsors. There's people acquiring these companies that come to us for capital, right?
Okay.
So
Yep.
they've found a nice like home improvement company or niche software or something. It can be anything really. They found it. They've done the diligence on it. they need to get some equity financing, right? They're going to get some debt, whether it's an SBA loan or if it's bigger, some like private credit debt. They're going to get some acquisition financing for that. And then they need to get investors to like cover the equity checks. And so that's where we come in. Like in venture capital, you're trying to look at like what could go right. It's like, oh, not what could kill this, but like, what is the thing that could go right that could make it 1,000x? In this space, you're looking at the opposite. It's just, you're looking for one thing to say no to. So is like, how risky is the company? Like, is it founder led, right? Does it need a ton of working capital there all the time? Like, just what could kill this, right? And if something could kill it pretty easily, then it's just walk away. I'm looking for things that, could be around 100 years from now. And that's the type of deal I'm looking for the most part, which hence the boring terms.
Would you say those typical companies are they looking for growth capital, or are they just looking for retirement and transition?
They are very specifically not looking for growth capital.
Gotcha. Yep. Well-established, developed.
It's a transition.
Gotcha.
Probably the vast majority, over 50%, are happening when someone's retiring. Maybe they've owned this business 20 or 30 years. No one's taking it over. They want to sell it and move on to the next phase. That's happening a lot. And then there's other ones. Like we're doing a deal right now. It's a corporate spinoff, right? This corporation's had this smaller unit to them. They're a huge corporation, but to them, it's a smaller unit. It's doing like 16 million a year. And they're spinning it off, that type of thing. Sometimes they're interesting roll-up opportunities where someone's acquiring several different companies in the same vertical, and the founder of each company is selling maybe like 70% of their stake, and they're going to stay on for a few years and roll that last 30%, because once they roll up the company, it'll be worth so much more because you can get like larger institutional or private equity buyers, that type of thing.
I can see that. So how does CapitalPad connect investors with opportunities in those industries like HVAC and machining? And what sets CapitalPad apart from other platforms?
Yeah. The space is highly fragmented, and that's actually where a lot of the alpha comes from. So if BlackRock could just write a check and enter these deals and get these types of returns that we see, well, they would. But it's too fragmented and it's too small for like these big people to go. So that creates the alpha, the opportunity. The problem with that is there's not been until now like a centralized place for this. Like, I don't know, say you want to invest in a dry cleaner, and not like to build a new dry cleaner, but to acquire an existing one. How would you go and do that? It's not really been possible. You have to be like well connected in this little tiny microspace that we're in. And so the problem we're solving with CapitalPad is providing this deal flow for investors who don't live and breathe this little tiny SMB M&A space, right? And so we have tons and tons of deals that get submitted to us and pitched to us all the time. And we select, I don't know, less than 5% of them to put them on CapitalPad and let investors take a peek at that.
What practical strategies do you recommend for individuals looking to build wealth through those small business investments?
There's the investor side and there's the acquirer side. And I think your audience might be interested in both, to be honest. From the investor side, everyone has different requirements of what they're looking for. Some people are wanting deals that cash flow, right? So again, some of these like home improvement companies type thing, they're going to do a quarterly distribution of their cash flow because you're becoming just a shareholder in the company. And so every quarter you're entitled to your share of the profit share. Others, like these roll-ups, there will be no cash distribution, right? They're going to roll it up for 5-6 years and they're going to exit down the road, hopefully at like a much higher multiple, like a much higher transaction value. That's the goal. And so there's not one right way to do it. Some people are looking for the highest possible return there is. Some people are looking for things that are really hard to kill. And that's my personal favorite there. I would rather take a much easier and straightforward like 3X than like a much more risky 5X. Because the 3X is still freaking awesome, right? Like you don't see that very often in other asset classes type of thing.
If you're looking for something more predictable, you don't necessarily need to be swinging for the fences.
Exactly. And my thesis is, as long as I have enough of these with talented people running them with industries that are hard to kill, then I come out in a really, really good spot. And I put my own money into all of the deals we've done so far. And, before we even started CapitalPad, I was putting my money into lots of these deals, which is initially like why I started the platform was like, this industry is kind of broken. Like it's great. It's amazing. There's all these things to fix. Let's go and fix that for investors, but also for the sponsors too. They're called like searchers or sponsors, sometimes like the acquisition or the entrepreneurship through acquisition space. Like we're really simplifying it for them as well. Cause it's a great place for us investors who've already made some money to go and really expand that capital. But I think the opportunity for the sponsors and the searchers themselves is probably even bigger if they're starting fresh type of thing. As you know, I mean, you're much closer to that space anyway.
No, it really comes down to that deal flow specifically, in that due diligence process and getting access to the quality deal flow, right? That's the key. And that's really where I could see you guys bringing value to those sponsors. So what challenges have you faced in private markets, and how have you overcome them?
From the people that are acquiring these companies, they're facing a lot of issues. Is like there's a lot of competition now. There's a lot of people who have figured out this formula that they can go and buy a company worth several $1,000,000 with just, I don't know, $50,000, $100,000 down. And then, through the game, if things work out, they turn into millionaires. So they figured that out. So it's much harder to find the companies. From the investor point of view, that part doesn't actually matter because we get to see the good deals kind of regardless. Some of the problems might be the multiples have been creeping up of these purchases a little bit.
Sure.
Not terribly, because there's like debt service ratios they have to stay in. Like the SBAs, they're just not going to fund something that doesn't fit into their models with like comfortable cash flow to cover the debt. But so it's pushed up a little bit.
And that makes sense. You're literally coming in to create a more efficient marketplace. Therefore, we see changes in the way the deals are being structured and at the price.
Yeah, I don't think we're personally having much to do with it. I just think there's just so many people trying. I don't know if there's. So one of the hot industries right now is like residential HVAC, right? It's almost a meme if you're on Twitter. Everybody's trying to buy these, and everyone's trying to not just buy them, but buy like 5 of them, roll them up, and sell them to private equity. And so now the multiples that used to be selling for 3x, they're now like 7x or 8. I mean, it kind of depends. There's a lot of variables there, and that's not a game that I'm really interested in. But if there's only so many HVAC companies that people can buy, and there's like 10,000 people trying to buy them, like the multiples will go up. And so maybe that game works out well. Like if you have a good HVAC company, it's a fantastic business. They print
really is.
money. Yeah. But I'd rather not play like the multiple chasing game for me. And so we haven't done any residential HVAC deals on our platform. We did a commercial one because commercial deals don't trade for side multiple, but they're not as attractive business either. Like, you pay for the difference, but from the investor point of view, like that difference you pay, I think, even though the business is not as good, you're paying half the price. And so it kind of works out still in the investor's favor.
Gotcha. So, for those new investors that are hesitant to enter the world of small business acquisitions, what advice would you give them?
Go slowly. Dip your toes. I did the same thing in the venture space. I did the same thing here. First couple deals just weren't that great because I didn't know what I was looking for. And of course, with CapitalPad, we're trying to curate this a little bit more. It's not an open platform. Not just anyone can bring their deal on there, but only put your trust in someone else so much. Like, dip your toes. I think in what Jason Calacanis's Angel book, he told people to like, when you get starting, this is for the venture capital space, to like go sign up to Angel List and put $1,000 in like 10 deals, right? And then just wait and just like see the quarterly reports, which they don't really do much in the venture space anymore. But like, kind of learn the game, learn what you don't know, and then make bigger allocations. I should have done that in the venture space, and I probably should have done that in this space too. But
Realize how little someone knows entering into it, even if they think they know. The reality is you don't know what you don't know.
yeah, and that the crazy thing, I'm a really experienced entrepreneur. I built a lot of stuff, all bootstrapped. Like I understand these businesses, and I still fell for traps. Like, I think, yeah, it's just skill set to get much better. And the same thing with venture investing. I don't do a lot of venture investing anymore, but when I do, I think my bets are much, much better actually. So yeah.
So you mentioned those residential HVAC memes. How do you differentiate between a trend-driven business and one that has sustainable real profits?
A lot of it is just the price you pay. So the residential HVAC, it's a great business. It's hard. I think people underestimate how hard a lot of these things are. But it's a great business. Like, there's nothing wrong with it. It's just the price you pay. Just think like Buffett, right? I honestly believe this, that if Buffett was 20 today, he would be playing in this space because the public market space doesn't have the same opportunities that it did in like the 1950s when he was playing and stuff.
You're right about that. And, from the value investing perspective,
Yeah.
I can see.
I think this is closer to like how the value investors would want to play it now. It's really like how much value you're getting for each dollar you put out, right? And you get a lot of value here. Now, there's plenty of downsides that come with this type of investing, right? There's no liquidity outside of like cash distributions. It's not like you change your mind 6 months from now, like, no, I want out of this. Like, no, you are there for several years most of the time. There's different exit strategies, and some never exit, which I prefer, but that's a different story. Yeah, you're there. They can be volatile. Can be a black box. Like, stuff happens. Like, nothing's free in investing. Like, you have to pay the price, and the price is this lockup, this illiquidity type of thing. So yeah.
Capital and time. It's the cost of being that minority shareholder in a private company. You just work your way through it.
It might even be an advantage in the long term, though, because if you can't sell, I don't know, like if you can't sell, then you can't like panic and get out at the worst time, which in these small business, you don't really see that. It's not like you don't have market crashes like you do, but you would still, or maybe you would just chase different, like the hot item of the week type thing. Oh no, I'm gonna go to crypto right now. Or I don't want to do this right now. Like, no, you just stay.
Well, it's like, traditional private equity investments, a lot of times are considered to be a less up and down, a more sustainable, more stable investment. But the truth is, it's just not mark to market as often. And
yeah, there's no market to market.
People don't realize that on Friday afternoon, the world's crashing, but come Monday morning, you fixed it all, and nobody knew the difference.
Yeah. Because why would it be marked? There's no reason to. So yeah, like no one knows the difference. But yeah, I agree with that 100%. I think even if they were like publicly traded type thing, I don't think the value would change as much. They're pretty locked in at these multiple ranges, but it would still happen to some extent.
So now that you're using CapitalPad, what ways does technology really change the landscape for small business acquisitions, but also for the investments themselves?
I'm not sure it's changed too much with what we're doing, to be honest. Which is not what you usually hear.
No, that's an honest answer. I'm curious now.
Part of it is, let's rewind to like some of my personal philosophy. I think there are two ways, like AI is changing everything, right? Absolutely everything. And there are two ways to play it. You can either try and pick the companies that are going to win big with AI, whether that's the chip manufacturers, the software developers, or the companies that can implement it internally and cut their staff by 50%. There's all those
sexy businesses.
Yeah. Or you can choose to play in the businesses that can't really be disrupted by AI. All right. And so when you look at like a plumbing business, a roofing business, and we don't do too many of those, but like that type of thing, AI is not going to change that. And so when you look at how technology is impacting it, it's not really, but that's a purposeful decision. So I played, and I'm not some like old boomer who has only played to this. Like, I'm a SaaS guy. That's how I made a lot of my money. I'm in e-commerce. And I realized that game is great. Someone can start from nothing and build something very big, like basically soloing it, right? A little bit of maybe just bootstrapping, or maybe just like small amounts of raised money. Like they could do a lot of things. But those types of businesses are much easier to disrupt. They're much easier to go to way. You can be wiped away easier, right? Generally, the quicker you can make money, the quicker you can lose it. And so I noticed with some of my e-commerce companies, some of my SaaS, some all this different stuff of my own, that yeah, like the longevity is not there. And people have figured that out. People were buying a lot of like online small businesses, and that market has really dried up because it was like great in theory. And I'm not pointing fingers because I was in that pile as well. It's like, oh man, I can buy this like content site for
Sure.
like 3x multiple. And I don't have to do anything for it, right? And then a couple Google algorithm changes later, and it's
Yep.
it's it's dead. It's worth nothing. And so that's kind of slowed down a lot. And so I'm more interested in the things that with real longevity. Like maybe it won't last 100 years, but it could sure last decades.
So, what trends do you foresee in the small business acquisitions? And how do investors prepare for them?
The space is having its moment right now. It's turning into the cool stuff, right? Like venture capital, I think is its moment's over for now. Um, so that's happening. It's going to become it's pretty opaque and people don't understand it right now. It's really just private equity. It's just smaller private equity on a deal by deal basis. Like that's all it is. But people don't quite understand it. They don't understand how the terms work and this type of thing. And I don't blame them. Like it's finance has a way of making things difficult, not because the concepts are difficult, because it's just like a weird vocabulary problem, right? Like a common term in this space is like a step up multiple. I know private equity like pros don't know what that means. And I didn't either. So there's all this. So I think it's going to become just more mainstream. I think it's the biggest change that's going to happen right now. It's going to become way more accepted. People are going to figure this out that, hey, this is a great asset class. And that might drive the returns down a little bit. And I'm prepared for that. But that's fine because the returns are so good that we can afford for the returns to go down if it gets competed away, and we'll be in good shape still.
That's a strong position to be in.
Right.
It makes sense if you're talking about your local HVAC, your local machine shop, your local roofer. There's only so many competition that can be in that market. All right. So you've got experience founding over a dozen companies. You mentioned that sometimes it was relevant, sometimes it wasn't, but what guided you and influenced your success the most here?
Well, as we mentioned, it started with that looking for independence, and then so I'm a very self-motivated person, and I can keep with that. But I don't think I would have beat anything without community. Um, and it's hard to really like pinpoint why or how the community makes a difference.
It's hard to describe the value that it provides, really.
It's
Agreed.
not like you hop into a community and suddenly someone gives you a blueprint of this is
Yep.
what you do,
Yep.
right? It's kind of absorbing through osmosis. Um, and that made such a huge impact in my life.
At the end of the day, it's all the difference in the world once you get plugged into it.
It really is. And I mean, I even own a community now, and it's amazing the amount of people who join that because I'm the owner, I get to talk to them personally. Where like if I was just in it, I wouldn't. People who join just to like to lurk, they just want to hear what some interesting, successful people are thinking
They
about.
want to be part of something, right?
Yes. And that's how I started too. Like I was just in some communities and like, I mean, it completely changed the trajectory of my life is hanging out with these people, online and in person. Is mostly online, but yeah, changed everything.
That's so true. All right. What's the best advice you can give to a startup entrepreneur starting out today?
To like not sell your soul to the devil and play like high integrity games, because pretty much everyone I know who has reached like a pretty high level of success at this point, they started very low, and that compounding happens like in a blink of an eye. The compoundings happen. Like it's really hard to estimate where someone could be in 10 years if they're doing the right stuff. Like 10 years is a career in entrepreneurship, like from start to finish, if you want it to be. But you see people taking shortcuts or trying to like hard sell someone else with like these kind of like icky products, right? And I'm thinking these like, maybe you've seen like the dropship dudes in Bali or something like that. And maybe a couple of those are adding some real value. I don't know, but a lot of them aren't. A lot of them are kind of charlatans, and they're trying to look rich and big, but they're just like selling out their audience for it. And maybe it works for a hot minute, but then they disrupt that compounding for the long term. And then they don't get where the tortoise versus the hare, right? The tortoise is going to win because they're doing the right thing. That integrity and that like not selling yourself out, I think really matters. And I think in the time of AI, where these little hustles are much more shorter lived, like the trust is everything, right? We see these influencers who get big and they kind of just sell themselves out a little too much and they burn out, right? But the ones who like maintain it, like, well, there's the book or the concept of having what take it of like the finite versus the infinite games. You want to play the game that you can play forever. You don't play to win, you play to keep playing. And if you do that, then I think you surprisingly end up better over the long term than if you just went purely for the money. It's an odd game, but I think it's totally true.
Travis, that is so insightful. The reality is when you have that opportunity to take the shortcut, all you're really doing is shutting a door. And you've got to keep your doors open, keep serving the other people. If you do that, as you're saying, you stay in the game, but more importantly, you're building that long-term compounding value. That totally makes sense to me.
Yeah, absolutely.
All right. I like to end our episodes with a fun anecdote about my guests. Share a story, a fact, or an experience about yourself that you think our listeners would find entertaining.
I funded my first companies solely through bartending and poker. That was it.
I love that.
Yeah.
Whatever it takes.
Yeah. Living in my dad's basement, literally his basement. Yeah. Bartending, getting off, playing poker, and then firing up his computer at like 3 a.m. to crank at it for a few hours. And I had no idea what I was doing. None. I did not come from a technical background. I was using like GoDaddy's drag and drop website builders. It was horrible. Oh my God. I was just like finding other sites that looked kind of like what I wanted and kind of tried to build it.
Recreating that.
Yeah. Religiously reading the 4-Hour Work Week. Like, how did Tim do this? Let me just do that. Like, oh my God. Yeah. It was ugly, but again, it slowly but surely worked. It was crazy, like how small the steps were and where they've compounded to now. And I did that, and then once I got to, I think I was making like $3,000 a month profit. So like small eggs in the big scheme, and I like left the U.S. Again, 4-Hour Work Week guy. Left the U.S. and went and lived on a little island in Thailand for a while. And then I spent a decade outside of the U.S. from that. And then just like, I thought I was going to like retire on this little island. Like, oh yeah, I'm like 24, maybe 25 or something like that. Like, yep, I've done my thing. I'll make my $3,000 a month and live happily ever after in a cheap place. And, kind of figured out that wasn't what I thought it would be long term. And then compounded up and then just use basically like the stair step method to use something to make money, sell it, or use that cash flow to build something else. Wasn't really the answer to your question, but it's kind of what flowed out.
No, I love that so much. Basically, do whatever it takes. Take the steps of the opportunity that's in front of you. Keep pushing through, whether you have the qualifications to do it or not, right? Whether you have that experience or not, just keep doing it.
Yeah.
Find your path through it.
And it's almost a benefit to have that friction of like getting started without much of anything. Like I think like the bootstrapping mindset, or like they call it fund strapping, raising a small amount of money to get you started. You're like, your back's against the wall and you have to figure all this stuff out yourself, to where if you were just had tons to just like hire it out from the start, like you'd never learn it. I think you become a far more effective entrepreneur, and then, long-term a far better investor from like doing this, because you know all the ins and outs of so many businesses versus just like what you think it's supposed to be like.
So true. You every time you do something truly difficult, yeah, it sucks going through it, but when you come out the other side, it changes how you see every other challenge in front of you, right? And you keep doing the difficult things, and eventually you see the world as Superman. It's just a challenge. I'll work my way through it and we'll keep going. And at a baby scale, that's kind of what entrepreneurism is.
And I don't think it goes away. So just for listeners, like, again, I'm an experienced guy. I started CapitalPad a bit ago, and I'm already investing in this space, but I don't come from a finance background, right? There's finance people who then kind of get into the space, and there's entrepreneurs who get into finance. It's hard for each side to learn the other's skill set. And if you don't come from a finance background, it's a rough entrance. And so when I started CapitalPad, it was it's so hard. And I just told myself, like, look, you're going to get your ass handed to you, and that's just how it's going to be. But a year from now, the stuff you know is just going to blow your mind. And it's 100% true. Like,
So
I'm
true.
a different person. Like, I talk to like high finance Wall Street people now. 6 years ago, I was slinging affiliate sites. Like, this is
Yep.
right. You just sit down, you keep doing it. You know it's going to suck. You eat that gravel, and you come out so much better on the other end. It's wild. It's wild how that works. Yeah, I don't think it gets easier, but if you accept that, what's the Ryan Holiday book? Like, the obstacle is the way. Yeah, the obstacle is how you get all the
It's
good
the
stuff.
educational path, the opportunity. It's the obstacle truly is opportunity in front of you.
Yeah.
And you're not going to enjoy that plate that's put in front of you that you've got to eat, but that's the path.
You want to be slightly outside your comfort zone at all times. Not totally,
That's where the
but
progress is
slightly.
made.
Yeah,
Yeah.
that's it. And become a different person. Compounding kicks
I
in.
love that. Travis, it's been an honor. It's been educational. It's been insightful. I appreciate you being on the show. And any last comments?
If you're a sponsor or an accredited investor, check out CapitalPad.com. Follow me on the socials. That's all I got. It was a nice conversation. I really appreciate it. You're a good host.
Folks, all of Travis's socials and links for content are in the show notes below. Thanks, everybody. Thanks for watching. If you enjoyed this episode of Planet Wealth Fortunes of the Brave, check out our other videos for more insights and strategies to elevate your financial freedom. You can subscribe right here and hit that notification bell so you never miss an update. Join our community and take your financial future to the next level. I'll see you in the next video.